Folks, now we set the ball rolling for our second round of panel discussion, whose mantle, whose helm will be again led by Mr. Tamal Bandyopadhyay.
Life insurance industry, as general insurance we discussed, was less than 1% of GDP, 97 basis point. Life insurance industry is, I think, 2.7% of the GDP, and that has been continuously for the last 3 years at least. I have seen that. So, that which means that there's an opportunity to grow. But the feeling is this 80cc going away, it's a blow to the insurance industry. That's what people feel, and that's what we saw on the budget day. So the first question is obviously, how do you see, is the 80cc going away, or the option not to take advantage of that and go for straight away income tax benefit? Is it a problem for the income tax, for the life insurance industry? And if it is indeed, how big is the problem, and how do you tackle this? So I'll start from you. How do you see, how many of your customers actually for the tax advantage they buy, and all? Because you are a sort of insider outsider.
There are lots of challenges, and so I think the tax benefit, especially on the long-term investment area, was something one was actually hoping for, that something extra would come out. That not happening, I think, there's no shying away from the fact that that was one of the incentives. Of course, 1010D is still there, but I do see from a consumer perspective some attractiveness going away in the future years, not this year, and there'll be some continuity for a few years, but as consumers kind of, I think there'll be some challenges there. Term, as was previously in the previous group mentioned, so health and term are somewhat similar in the sense, people spend about 5,000, 10,000, 20,000 rupees on a plan. It's not only for tax saving. Tax was a good inducement there as well. So I don't think the protection segment will be that impacted, but I think the investment segment, one of the reasons was tax, and that's why you used to see a large spike in March. That's why there was seasonality in the industry, right? So I think in future years, some of that will start to get challenged, and I think that is both an opportunity for the industry to look more at innovation, look more at protection, but it's a challenge from a lot of investment points.
Okay, so it's a challenge. Thanks, Ashish. Vishaka, if I keep you as the last person, you'll think that I have a gender bias. So, so rather you be the first one after from an insider perspective. Ashish is saying it's a challenge. It will impact. Because traditionally, all the insurance industry, it's a big incentive to actually have more penetration in the industry. That's what the perception is. So do you agree with that? Yes, with Ashish, it's a big challenge. Tax incentive is going away. It'll be, you need to reinvent yourself.
Insurance at the end of it is a risk management tool. That's what life insurance is all about, whether it is a financial risk or it is a morbidity and mortality risk. We are a country where we need to be fined to wear a helmet. We are a country where we need to be fined to wear a seat belt. To do anything which is in your own interest, you need to be fined. Now in life insurance, you can't be fined for not taking life insurance because you're not around to be fined. So tax incentives was actually some kind of a motivation to individuals to be more careful and to be more risk aware and to protect their families. It was an incentive. I think this is a disservice to customers at large.
There was a time probably tax was one of the key elements in terms of why he would go and buy a life insurance product. But if you have looked at what has been happening over the last few years, the reason for which the Indian customer is buying life insurance is not tax saving. It could be in terms of planning for exigencies. It could be in terms of improving his quality of his lifestyle. It could be in terms for his child education. Even in the recent surveys that we have done in terms of why the customer is buying, the reason of tax is actually slipping down the order. So
this survey was done before the budget?
We are done with Nielsen. We've been following this every year.
No,
normally it is, it's been done every year. There was one which was done very recently by Nielsen. And actually it ranks almost 8th or 9th in terms of the order of why insurance products are being looked at. So in our concern, it really is not so much of a difference. The second part is from actually what will happen on the ground in terms of whether the customer will switch to the new tax regime. we are not too sure whether how many of them will see a
This
huge
incentive is not actually the factor for which people buy insurance.
So we've also seen similar. We've not received any pushback from our sales team on or heard that tax is the first thing that gets pitched now when insurance is getting sold. So the understanding based on the data is that most people are wanting deduction. Now the current regime allows you the choice. Going forward, whether that choice will remain 3 years down the line, we don't know. But as of now, the choice remains. Personal take is people have been exercising the choice in favor of deduction for so long in such large numbers. To my mind, they should continue to do that.
I actually, from our perspective, when you look at it, I don't see any impact whatsoever because of this change. In the short term, I think it makes sense for the bulk of the customers to continue with the exemption regime. Because when you look at the mathematics, when you look at the way tax works, if the customer is availing of the exemptions up to a certain break-even point, even under 15 lakhs of taxable income, it makes sense to be in the current regime rather than opting for the new regime. That is quite clear. The only issue is that once we are forced to shift to a new regime of no exemptions at all, at that time what has happened seems to be a question rather than a here and now question. That's what I feel is the issue. If you look at the savings and investment side of the business, we should remember that life insurance never had a separate carve-out. It was among one of the 70 odd exemptions. I don't think we had any dedicated exemption at all to say that this industry was surviving only on the tax. So this is something which is of a less debate has happened outside to say that yes, insurance will get impacted. It is one of the 70 exemptions.
They may say that it's not a challenge and it's a non-event for them. But for LIC's profile, your target clientele is particularly those salaried people, and this tax incentive, I mean, correct me if I'm wrong, tax incentive is a sort of big advantage for you all along as far as your clients are concerned. So do you see that it's actually is going to affect your business, if at all?
Almost 3 crore policy industry is selling every year, and as Mr. Vijay said, 5.5 crore total income tax pays. If every year 3 crore customers, policies are being sold, so it becomes very irrelevant. It's not, and it's one of the exemptions, as Mr. Kannan has said. It's not that. Now we look at from this angle that broadly we are having 3 type of categories of our customers. One is the HNI segment, which are not bothered about this ATC. Then there are rural customers who are not filing, they are not supposed to file any income tax return, or they don't have that kind of income that they have to pay. There was a middle segment, which I believe that it has already been tapped. Only the newcomers, new joinees in the services kind of thing, they may be interested. But in the long run, I think insurance being a push product, yes, it was a incentive to sell the product. But in the long term, we have to educate the customers that life insurance is for protection, not for the tax saving. Tax saving was an added benefit. We don't have any feedback from our field force, 1.2 million strong field force. We have not got any kind of feedback from them that it will be very, it will be challenging for them to sell life insurance. And we believe that it's not going to be a major factor in our sales. Second thing is that, yes, as Sureshji has said, 20 years back, Life Insurance Corporation of India was getting close to 50% of its business in the last quarter. 50%, sir. So that has come down to around 30% now, for us also. Okay. So it is not that presently it's only the tax saving kind of benefit through which the product is getting pushed. So it's a human tendency that when we have to pay the laxity bill, we wait for the last date. Indian psyche is there. So financial year is ending in the March, so people buy. Throughout the year, our field force, all companies put together, they are talking to the customers, pushing their products, and the people are taking their decision in the month of March only. This is my belief.
So this has nothing to do with tax benefit per se.
Yes.
So I think Vishakha and Yashish, you were sort of minority. You said that it's a challenge and it will affect and all. But the rest of them, the 3 listed entities and the largest player in the market, they said no, it's a non-event per se.